briefly above $31,000 yesterday after the block reported that asset manager giant Fidelity is preparing to file a spot Bitcoin ETF. Or maybe they're planning, who knows, no confirmation, at least from Fidelity. But what does that mean for the market? Well, joining us now to discuss is Maple Head of Growth and Capital Markets, Quinn Thompson. Welcome back, Quinn.
Hey guys, thanks for having me.
Yeah. Hey. So okay, we see this ETF coming in. This another rumor of an ETF being filed. We saw the BlackRock iShares ETF filed. And a couple of others also too earlier, Wisdom Tree and the like. So, is this really long term? Is this real? Is this sustainable? Is this $30,000 level sustainable, or is this just hype?
Yeah, so I mean, the first Bitcoin ETF has been one of the most anticipated events in the industry for years, and so if you're in and around the space, you just cannot be underexposed or unexposed going into that potential approval. And now that you have 6+ of the major, asset managers managing almost $30 trillion across them, making these filings in the last 2 weeks, a positive outcome there is becoming increasingly, likely. And then on top of that, you've had, tons of positive headlines over the last month. FTX estate recovering more assets, Celsius reorg, Core Scientific reorg, better miner earnings on the back of ordinals and lower power costs, and a lot of positivity flowing. So, even Jay Powell is adding fuel to the fire, with his positive comments on crypto and stablecoins.
Right. Nonetheless, we had this levered ETF come out yesterday, and it had, let's just say, kind of disappointing volume the first day. Does that give you any reason to say, you know what? Okay, so what happens then? What is this a situation where you buy the rumor, sell the fact?
Yeah, that's a great question. I mean, leverage ETFs it's quite funny that gets approved before a spot. You're basically guaranteed to lose all your money if you hold a leveraged, particularly 2x leverage ETF over time. But I'm debating this question myself. You look at the first gold ETF, GLD, back approved in November of 2004. Gold did a 5x in the subsequent 7 years after that. And thinking that through a little bit, at the time, gold as an asset class was about 15% of total U.S. equities public market cap. Today, Bitcoin's $600 billion, which is 5% of gold, but the U.S. stock market cap is about $45 trillion, and so Bitcoin today represents just over 1% of the total, public U.S. equity market. And so if you think about what an ETF does in terms of giving that stamp of regulatory approval, ushering more and more of the large asset managers in by giving them a vehicle to hold the asset, I think there's a very strong case to be made that it's not a just one and done, and there should be consistent flows following that up that could lead to a sustained rally.
What are your predictions if the ETF gets approved?
Yeah, I think you continue to see the Bitcoin dominance rally. So that's something we've been talking about a lot in terms of, the inflation story. It's important to remember Bitcoin and crypto is a global industry. About 80+% of the trading activity occurs outside of the U.S. And so, among that, you have positive developments coming out of the UK, Switzerland, Japan, Hong Kong, Singapore, Dubai. Inflation in places like the UK remains problematic, and currencies rapidly devaluing in China and Japan. And so there's a lot of reasons, given it's such a global asset, that people would turn to this. And there's a need for a neutral store value, protection against monetary debasement. And so, I think we continue to see a little chop. The macro's been quite supportive, with tech equities going to all-time highs. But I'd expect outperformance from the crypto space, particularly Bitcoin, on the back end of the ETF approval, and things like the GBTC and Grayscale assets. You'd expect those to close up on the discount.
You brought up tech and tech stocks. We're seeing still some rising interest rates, obviously, from the Fed, and an attempt, at least, he might say nice things about Bitcoin, but he is definitely not a big fan of inflation, Jay Powell. So is this, is the Fed's attempt to throw water on the economy in many ways going to hurt the appetite for risk? Are we going to see people say, look, you know what, the interest rates are too high for me to lever and to buy and borrow to buy Bitcoin and other things. I'm not going to play in that. I'm going to step back. Are we going to start seeing more people say, this is just too much for me to handle? I don't want to take this risk right now.
Yeah, I think it's something I'm watching very closely. I would say, the lowest hanging fruit on the inflation battle has been harvested. We've seen oil come down all the way into the 60s. The rest of the commodity complex has looked pretty weak. Copper and a lot of other inflation indicators, are pointing to weakness ahead, or at least a reduction from the levels we're at, which are still too high for the Fed's, what the Fed wants. So I think as long as the inflation numbers continue to trend in the way they're going, I don't think the Fed actually, picks hiking back up. I think they might be paused here, with the caveat that, if the commodity price environment, stabilizes or kind of reverts higher, you might get some inflationary pressures alongside, dollar weakness, which would be, opposite of what happened in 2022 and therefore kind of import inflation into the U.S. So I think it's a time to be a little cautious. We should start to get some clues over the next few months here as, some of these events get chopped through. But, relative to those tech assets, I think, if I'm going to bet on one, it's going to be crypto.
And Quinn, lastly, we took a look at the DeFi index at the top of the show. It's down about 4% today. What is your outlook on DeFi and altcoins amongst all of the celebration with Bitcoin?
Yeah, so on that Bitcoin dominance trend, on-chain activity remains in quite a bearish trend. You look at Ethereum, transactions and just across the ecosystem. There's still quite a few headwinds, I would say, for protocols and altcoins. So, that Bitcoin dominance has run pretty strongly. Been talking about that since the beginning of the year, and so I'm not saying now's a great time to go long relative to alts. There's probably some mean reversion if Bitcoin does sustain a rally here. You're going to expect people to go further out the risk curve, but particularly on the back of an ETF and any sort of macro weakness in the second half of the year, you'd expect alts to maybe continue their weakness. And it's becoming more of a bifurcated story where it's not just all alts or Bitcoin. I think as the space develops, you want to focus on asset selection and make sure you're allocated appropriately, and it's not just kind of one size fits all.
Quinn, thank you very much for joining the show this morning.
Yeah, thanks for having me. Take care, guys.
That was Maple Head of Growth and Capital Markets, Quinn Thompson. We're going to take a short break, and when we come back, we'll be exploring Singapore, which was dubbed as one of CoinDesk's crypto hubs. Stick around.